Welcome to Protea Weekly. My name is Zane Stevens. I'm the founder of Protea Financial. Happy Tuesday. Just on time. So feeling good that I was at least able to stick to that. I've had a busy morning already. Multiple phone calls. Started the day well with a brand new client. Excited to help somebody else get their books in really good shape. Um, and see what that does for them and the future of their business. I also just recorded a podcast, which was really exciting and very inspirational and gave me a lot of energy. It's so interesting to have great conversations with people to show you just a different world. Like, I think sometimes we all get really stuck in the space of this is my world, this is the way things are. And way too often we all get sort of stuck in our preconceived notions of what life should look like. But everybody's on a different journey, and it's really interesting if you just stop and listen to what other people are going through, what they're up to. You can learn so much. And I'm just so thankful when people are willing to have those conversations with me, share their journeys with me, and like give me an opportunity to have a new outlook on life and just learn something new. So I'm very appreciative of everybody who's willing to have those conversations with me. This week on Protea Weekly, we're going to continue to focus on cash flow. You know, if you continue to go on the Google and ask the question, you will see that it is a tough economy. Interest rates are up, though the Fed did keep them flat the last time around. Inflation numbers are not at target, and if you just look at the cost of, food and gas, prices are way up. So it is a tough time for businesses, especially for consumer product businesses as well as businesses in the luxury space. And I would say, as I focus in on the alcohol beverage space and the wine industry in particular, most of our clients are really focusing in on that luxury space because it ain't cheap. We're talking most of our clients' bottles are $35 or higher per bottle. It's a difficult market because people are going, well, can I afford that on my day to day? Do I look for a cheaper alternative? Do I potentially go to a product rather where I get more bang for my buck? Those sort of conversations go through, and it leads to a situation where, you know, clients are taking a bit of strain. They're having to lean on debt, especially in a growing environment, or if they have very heavy working capital. And a couple of weeks ago, we spoke about lines of credit. And lines of credit are a really great option to deal with the seasonality of cash flows in businesses, but they do come at a cost. There is an interest charge to that debt. There is a charge to your balance sheet. There is a situation where you have to pay that back at some point in time. So it does take your cash flow. What I want to focus in on today is one of the tools that could supplement that line of credit, supplement your business, that a lot of you are dealing with, but sometimes are a little scared to tap into the resource. It's one of those places where we're too nervous to push hard on it to receive the money that we actually are due because I don't want to upset anybody. I think you all understand what I'm talking about, and that is accounts receivable. Accounts receivable is the money owed to you for a product or service already rendered, and there's an agreement, a contract, a legally binding note to say that those people will pay you at a future date. We have an agreement with the people that we delivered product to or gave services to that says, thank you for that product or service. We will pay you in 15, 30, 45 days time. We have a right to that money. It is your money. You need that money in your company to be able to continue to function. I don't know if you guys have ever heard this before, but a sale isn't a sale until you collect the money. We'll all talk about orders placed, orders delivered, but there's no use of selling, millions of dollars of product and never collecting the funds. So my question to business owners out there, or even accounting teams sometimes, and definitely sales teams, why are we so scared of asking for money that is ours? Why are we so scared to reach out to our customers and say, we delivered a service and a product that you clearly appreciated and liked, but you have not paid me, and you have not paid me on time based on the agreement you made? You said, yes, thank you for that product or service, and I promise to pay you at a future date, and you missed it. One of the best ways to supplement your business's cash flow is to receive the money that is due to you. That means either selling on a cash basis or having good processes in place to collect money from the people that you have given terms to. If you're a fully DTC business that's selling online, collecting funds is probably not an issue. People have to pay you before they get the service or product. That is the reality for a lot of businesses. And if that is your business, I probably am not talking to you. This session isn't really for you unless you're going to make a significant change to your business. I am talking to the people that do offer terms, or are in an industry where terms are expected, especially by the bigger players. In the wine industry, there's a three-tier system. And a lot of the time, especially in certain states, have no other choice but to sell to a third party who will then sell to the consumer, and they will want terms from you. They will want an agreement to receive the goods at one date and pay you for it in the future. That's okay. It is the cost of doing business. And it is a cost because you have to get that money from somewhere. You have to pay for the product as well as the process of getting that product from you to there. They might pay for the shipping, sure. But there is a labor cost involved. There's a holding cost involved. There was a cost for you to deliver those goods to them. You have already injected money to make sure that product is available for that person. You send them an invoice. They tell you they're happy with the product, and it comes time to pay. You need to have a process to reach out and say, pay them. I don't want to hear any of this nonsense. They're an important customer. We should be kind and polite. Sure, we should be kind and polite. That is important, but it doesn't stop us from being able to send an email out and be like, your invoice is due in a week. Your invoice is now overdue. Your invoice is long overdue. We need to normalize for all business owners that it is okay to ask for the money that is due to you. If you sold a product on terms and that term has come to an end, it is your right to ask to be paid. Now, I hope that you never have to ask to be paid and everybody pays you on time, but unfortunately, that is not the reality. And think about it this way. You always want to be nice to your customers because they're the people who purchased from you. But if they are really good partners in this selling arrangement, surely they should be nice and kind to pay you on time as well. So a quick little detour, and especially to you big guys out there, the big companies, the listed companies, the mega corporations out there, stop being ridiculous and pay your vendors on time. Do not use small businesses as a banking facility for your company. Those people are working really, really hard to give you a quality product or service and deserve the respect to get paid on time. If you are an owner, a leader, accounting person in those big companies, stop. Be better, pay people on time. They deserve you to adhere to your terms and agreements. And it is your terms. You told them you will pay them in 45 days. Don't cut that check on day 46. Don't be like that. This is people's lives and livelihoods that you are affecting when you mess around with small businesses and you don't stick to your own agreements. So, big businesses, stop being like this. Respect your vendors and pay them on time. Now, back to you, small business owners. You have a right to collect the money, and the best way to keep your business cash flow positive is making sure that you collect funds on time. It is your right. You've given them a good product. Go and ask for that money. Do not be scared. Do not be afraid. Don't feel embarrassed. It is your right. It is part of the transaction is for you to get paid. Ask for it. But let's step it back a little bit. If you have a accounting key in place, a good process around credit sales is important. Creating a standard operating procedure on how the process will be handled is critical to make sure that things run smoothly and you receive the funds on time. That includes a process on how to receive the orders, how to fulfill the orders, and how invoicing works. Especially if you're working with big companies, understanding the way the invoice needs to look and where it needs to be delivered is very, very important. And then you need to have a process in your receivables team that is more than just the invoice, but it is a process of reminders and follow-ups for clients that have not paid. Nobody's going to get upset with you if you send a reminder out that the invoice is due in 7 days. Nobody's going to be cross with you if you send out a reminder on the day after it's due to say the invoice is now overdue. And then have a process to escalate it, probably away from just an email to a phone call, to reach out to that customer of yours and figure out when will they pay you. Do not be scared to not issue new orders to your customers if they are overdue on any of their bills. That is acceptable business process and should be part of your selling process. Because if they're overdue, you have no idea what's going on with their business. And remember, no company is too big to fail. So do not put yourself at risk of non-collection, because then all that hard work, blood, sweat, and tears is not worth it. You need to create a good accounts receivable process to make sure that invoices go out on time. You are reminding people to pay you on a regular basis, and a process in place to escalate follow-up when things become overdue. This is important. You need to protect yourself and your business, and you need to help your cash flows as much as possible by creating a good process to receive the money that is due to you. You had a contract, it's your right to receive it. Feel free to follow up with it. Especially when it's accounting to accounting salespeople, they will not get upset that you're following up. They expect you to follow up. It is normal operating / business process. People will follow up to get paid. Think about it in your personal life. Is that in medical bill just not getting followed up on? No, they want their money. They'll hand you over in like a week if you're late. So why should it be any different for a small business? We have a contract. Do not be scared. You need to keep cash in your business, and the best way to do that is to manage your accounts receivable. Get paid for the services or products you sold or offered. You'll hear this in a lot of spaces, smaller wineries, smaller alcohol beverage space, sell DTC. It's not just because it's better margins, it's also because you're receiving the cash immediately. That is good for business. In professional services, there's more and more of a call to get paid in advance. Pay us, then we will do your work. It removes the process of having to follow up and get paid or risk not getting paid. Accounts receivable, when it grows, can put your business under a lot of pressure. Follow up on it. Have a good week. Be kind. Until next time. Goodbye.